Improving your results using the magic of company earnings. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Thursday, the 1st of March. Can you believe it's March already? It's hard to believe. We'll be looking at retailers that rock with same-store sales. And did you know that trade technology has done very well with these retailers? And we'll show you which ones to be in and which ones to be out right now. Has crude oil found a bottom? We think it has. We'll be talking about that today. And we'll also be analyzing all the different markets using our trade triangle technology. But first, is personal one-on-one Market Club coaching right for you? Maybe it is. Maybe you should give us a call. The number's on the screen. It's a free call. It's a free consultation. 1-877-219-1482. Speak to one of our consultants and see just how Market Club's one-on-one Market Club coaching can help you become a better trader. That's our goal and our mission, is to help you improve your trading in 2012. So let's go to the charts in the portfolio. Excuse me. And we're going to go right to our portfolio. Looking at the S&P 500 cash, it's plus 100, so we've got a very strong upward trend there. And it's something that you may want to see. This trend continues up. We looked at 3 months. It's just really doing well. There's our buy signal at 1292. And we're currently trading at 1373. Almost 100 points profit in there. And this is a new high close if we close up here. So very strong trend. And it just continues. And that's the nice thing about this market so far. So let's look at the Dow, plus 100 there again. A strong trend. When you get you look at these markets, plus 100, not quite as strong as the S&P. We're just up a little bit, but sort of we're flattening out a little bit here. But the market trend is still positive, and that's the important thing to look at. If we put some of our studies on there, like the parabolic, you see we're just below. The prices are above the parabolic, indicating the trend is still very positive. So next market's going to be the NASDAQ, and of course that's up today. That's up 0.75%. The Dow was up 0.35%, and the S&P was up 0.58%. So the Dow is certainly the laggard here. But looking at the NASDAQ, excuse me, which is the biggest mover for the move day, it still isn't above yesterday's high. I'd like to see it close over yesterday's high, which was 3,000, that magical 3,000 level. So we still have a little ways to go before that could happen. But nonetheless, the trend is your friend, and everything is positive from this date on the 18th of January at 2,753. That's when we got long. And I know when we got long, a lot of people didn't believe it, didn't want to believe it, and they're still not in the market right now. We're looking for these markets still to go higher. So next market we're looking at is going to be silver. Now, silver had a huge move yesterday. It's up a little bit today, but it was under a lot of pressure yesterday. You can see the big move down here. Let's just scope this in just a little bit closer. And let's take our telestrator and let's look at the market and see what we think is going to happen here. Well, first of all, this was a really big negative move right here. You see how it engulfed the previous day? So here's the range here. And when you have a market that opens higher like it did here and closes lower, that's called an engulfing line. So that's a negative engulfing. So it's an engulfing line, and that is normally a negative sign if it's red like this. If it were blue and the previous was red, then that would be a positive engulfing line to the upside. Now, if this market right here, this is the key day, this is today, right now, if we close, and these are real-time prices, by the way, if we close below this low here, so we're not that far away, so let's say below the 35 level. In fact, let me just do this. Let me get you an exact price rather than just guess what we're saying. So I would say if we close below the 33, excuse me, no, we want the close. So 35.06. If we close below 35, let's call it 35 just to be even. If we close below 35, this is a negative signal, confirms this signal. It would mean we're going lower. So that's the important element. That's the takeaway from this market right now. So let's go back to our next market, and that's going to be gold. And gold looks actually worse than silver. Here's the negative engulfing line. Remember, it went over, and one of the biggest moves in gold we've seen so far. This market is lower so far today. If it closes down here, this will confirm that this was a top, that it is a top. And what we were looking last night in our show, let me just take this out. we were looking for this market. I'm going to take these signals off. We were looking for this market to do exactly what I'm going to show you right now, and that is we were looking for this market to come down like it did here, go up, come down. So that's what we're looking for right now on the downside, and I think that's a good bet. So also what we did yesterday, we measured the time window going from the period here, in fact, let me get the right tool, the period from here to here, and then we just stretch that further forward. It looks to us like it's going to continue to be evaporating, and we can see this market going down to the 1650 level, which is about another $60, $70 from where we are right now. So I think it's just going to erode slowly down to these levels. So let's see how it plays out, but nonetheless, this is definitely a big moment in the gold market, because this is a very major resistance at 18. This is the big level everyone's going to be watching in the future, $1,800. Gold market has to move over there to get any kind of momentum going on the upside. So let's see how that plays out. It seems like everybody wants to be in equities and not in the metals, except for the next metal, and that is copper. So let's clear the screen off, and let's go to our next market, and that's going to be the copper market. And copper actually did very, very well today. See how it moved up? We were looking for this market to do better. It actually boop, popped up. Really, it just it acts very, very well. And we expect to see this market just improve from these levels. So again, we're looking for this market to at least test the $4 level, probably even higher than that. As long as the economies are going well in the world, and they are, if you look at our global strategy portfolio, you can basically get involved with these markets on the long side, the copper market in particular. So let's go to our next market. This is crude oil, and I'm going to look at a couple of things. I'm going to look at crude oil, and also I'm going to look at I want to put the line chart on here. And we made the turn back up. I'm going to look at the USO because it's a better chart right now in terms of the data points. And let's just go back to here's the doji line, which is normally an indication that we see when a market's put in a top or a bottom. You can see back here, there's a doji line, there's a bottom there again, boom, the market came right back up. A doji line here, another doji, boom, right back up. So what we're looking for in this market, I'll scope this out, we talked about this again last night, is the pattern we're seeing in this market. We've got a very strong area of resistance, which I'm happy to say we've taken out on the upside. If you remember our special report that we discussed, said that we thought the market, if it closed over this level here, that we would break out. That's exactly what happened. And we're looking for this market to now, let's scope that a little bit better. We're looking for this market to go considerably higher, certainly up to the 45 level would be a target zone, which would be these previous highs are right around here. But this is a very large energy base. You see how long it's taking to do this? You're looking at starting from May, right here, all the way through till, I would say, late February. You had this huge base, and that's indicating you got more strength underneath this energy field. We call these energy fields. And this is what we're looking for this market to do. It just looks like it's just going to go higher. Just really like the formation. Where we close tomorrow, Friday, is going to be very, very important, of course. But if we close close to the highs, let's clear everything off the screen, get a little closer in on this one. And so if we close, I would say we close, let's see, this is last Friday's close, right on the highs, 42.02 with 41.37, not that far away. I would say if we can close up 41.80 or better, I think this market's going to look very, very nice on the weekly chart. So if we go to a weekly chart, you look at an idea of where we are. So here we are. It looks as though we could even take out the 42 level. So let's see how that plays out. And go to our next market. And the next market we're looking at is hold on just one second, and we're going to go to the dollar index, and I'm going to look at the Reuters-Jeffries index. This is our inflation index. I want to look on a daily basis, of course. And Here we are. This market looks like it wants to do better. If we go out, scope this out, it gets a little bit of history on it, which is important to look at the longer term. You can see how it's just going sideways, and boom, it really moved over the 325 level, which we thought would be very, very good. We've had the pullback. Now I think we'll see this market going higher, meaning higher inflation. It's going to track copper prices. It's going to track the crude oil prices and other raw basic commodities. Everything's going to just be a little bit more expensive, and this was our concern. And if I just do a simple, take the on-chart studies off, which is the parabolic, and we'll just put a simple line chart on here, and we'll go out, let's say maximum. You can see this, we've broken over this trend line. If we just put a very simple trend line in here, you can see how we've broken over this trend line, and I think that's going to be an important element. Also, the measurement points on this are very interesting that you can look at. I keep reiterating this to show you how you can look at these markets. Of course, we use our trade triangles, but you just measure from here to here, and then from here to here. It gives you a sense of where the lows are. And of course, if you measure from the highs here to here, and then here to this high here, you sort of get a very sense of where the market's going to go. So we've got a new high coming in here, somewhere along the line here in the future. But we'll measure that out further as we get closer to it. But lots going on. Let's take a look at the retailers now, because we talked about those retail stocks and how our trade trial technology can help you avoid some of the mistakes that traders make. Here, looking at the gap is up 7.23%. We have a plus 100. But did we get long just today, or were we long before this entire move took place? So very simply, we'll go to the 3-month chart. We'll put in our trade triangles, and we'll go back to 6 months because we actually got in right here. And that is, let's just take this off the screen. Let's put a candlestick charts in. And we got long at 1968 on November 3rd of last year. We've never had a sell signal to get out. And if we go put our weeklies in, now this is what we do with our tools, and this is why they're so effective. Now I'll show you this. So you take our monthly trade triangles, and let's just clear the screen. We don't need that. We take our monthly trade triangles, and we want to basically say, okay, right here, it's a green triangle. That is a buy. That is a trend change. Okay, so the trend was down, and now it's up. So it's a trend up. It's a buy. And this point right here, this weekly trade triangle, is an exit. Okay, so you exit the position. You don't go short. You get in and you get out. So probably made no money there, but you get back in right here. And this relates to this price right here at 1918. The market has a big move up today. I would say about 7%. So you're long from 1918. And these are all put in not after the fact. They happen dynamically. So you're long from 1918. Excuse me. The market's trading at 25.08. So you can say you've got another, let's say, a nice $5, almost $6 profit in there on a stock that cost you $19. So you've almost got about a 25% return since this date right here. And this is, we can tell you the date exactly when that happened. So let me clear the screen, and let's look at the date. So I'm going to clear the screen, go back, and boom, look at the right date here on the 19th of January. So in a little over 6 weeks, you had a 25% return, which I think is pretty astounding in this stock. And it's all to do with the trade trials, not listening to any news or any other information, just letting the market tell you what it wants to do. Now, this is an up market. Now, let's take a look at another market, and we'll be looking at JCPenney. Here's the same scenario. Here's the monthly trade triangle. Let me get my little telestrator on here to show you. Here's the monthly trade triangle right here. So this is a buy. It's because it's an uptrend. Okay, so the market, the trend, the monthly gives you this indicator right here gives you the trend, okay? The Weekly trade triangle gives you the timing. Pretty simple. Now here you get in here at this level at 34.50, and you're out at this level. That's an exit, as we've showed you before. And you're out at 40.65. So that's a $6.15. That's about a 20% return in a very short period of time. Again, this is not listening to the news. It's nothing doing anything else. It's just listening to the market. So Ron Johnson, I know, took over this company, JCPenney, the new JCPenney, blah, blah, blah. It doesn't matter if it's the new one, the old one. The reality is the market went up, you were long, and you made a nice profit. You made approximately $6 on this trade. So that's the important thing to look at. And you're out of the market right now. So what you would be here is you would be on the sidelines waiting for a new signal or using our trade triangles to find a new trade for you. It's just that simple. So again, you have three positions you can have in the market. You can be long, you can be short a stock, or you can be on the sidelines. They're the three positions we recommend. So, hey, this is Adam Hewison. I appreciate you stopping by and listening to what we're talking about. And again, maybe the thing to do is, maybe the thing you want to look at is really look at, is one-on-one personal coaching right for you? If it is, hey, give us a free call. It's 877-219-1482. It's a free consultation, and you have nothing to lose. Adam Hewison from MarketClub. Thanks for stopping by. Every success in trading today.